I read the news so that you don't have to. Imagine there's a bank and it's running along and the regulator says to it, how financially healthy are you? And they send them fake documents, not dodgy accounting, not creative interpretation, literally forged paperwork. That's exactly what happened in the UK. So as you can see, the headline says Bank of London fined over fake documents. So let me tell you exactly what happened. Bank of London is a fintech that launched in 2021 with a 1 billion unicorn valuation. That's $1 billion. And they have been hit with a £2 million fine from the Bank of England regulator. Why? Because for 3 years, they misled regulators about exactly how much capital that they had. And not just quietly, we're talking fabricated documents to cover it up. Okay, so let me break this down because this is serious. So banks are required to hold something called capital. Basically, it's a financial cushion so that they don't collapse when things are going wrong. Think of it this way. If your bank loses money, then the capital stops it just going bust overnight. Now, here's where they're on a mad thing. The regulator actually found over a dozen rule breaches. The bank had actually failed to report a capital shortfall that they had, and they falsely claimed that they had enough capital when they didn't. The worst part? A senior manager allegedly created fake documents in order to mislead the regulator. This is not a mistake. This is not like a spreadsheet error. Deliberate deception. Baby, this isn't some tiny startup. This is a bank that has been backed by some big names, including people linked to Goldman Sachs and UK politics. You may have heard of a few of them. Peter Mandelson. Anyway, while they were doing all this, the reality is that behind the scenes, they were facing tax issues, they had a winding up order, and the leadership was stepping down. So while the brand was out here selling next big fintech bank, the reality was a lot messier. This hits at the core of trust in the financial system, if there is any, because essentially banks can't work without trust. We trust them to look after our money, and we trust that when we want our money, we will be able to access it. If regulators can't trust what they're being told by the banks, then the whole system becomes very risky or riskier. And the bigger picture is this. Look, fintechs love to position themselves as the future of banking. They're faster, they're smarter, they're more innovative than the traditional banks. But here's the reality is that the boring stuff still matters. Let me get on my high horse and say governance, controls, compliance, honesty, they all still matter. Otherwise, you're not actually doing anything. You're not disrupting banking. You're just recreating the same risk in a shinier app. Oh, and one more thing. This is actually the first time that UK regulator has fined a firm specifically for failing to act with integrity. So I guess also they're trying to send a message that, like, if you lie to us, we're going to make an example of you. But is 2 million really an example?